Welcome to Momentum Monday. Today is March 19, 2023. Howard, what's new with you?
What's new, baby? We're alive. We got bankrolled. The party goes on. Were you at all nervous? Did you follow you're the type of guy that's very careful. So were you ever worried about a bank run?
Not in this case.
Your money's at Interactive Brokers. Let's pull up the chart. Where they hit the least as one of the stocks that
just my brokerage money. Otherwise, I use Bank of America, which
relatively, if you believe this is going to pass, they're in the best position. But that's another breakout.
Look, all of the financials were hit pretty hard, obviously.
No, but they were already weak. Interactive Brokers was at an all-time high. So that's
yeah. They will survive, but obviously with new banking regulations and stuff, their bottom line is going to get hit either way. So this is why we have financials so weak. But we'll get to them. Let's start from the top.
Let's talk about me. How am I looking? Do I look pretty good?
You look amazing, Howard. You look like 20 years younger than you are.
I'm so tired. I put on about 100 miles the last few days with some buddies, and I'm just that was a grind. So I'm a little bit pooped. All right. So take us. This is one of the most.
Yeah, let's talk about last week.
2 weeks. I wouldn't say it was fun for me because it was stressful, but it was one of the most interesting 4-day periods I've had since COVID. So walk us through what you're seeing in the markets.
So, obviously, the government stepped up and saved all the depositors in Silicon Valley Bank, Signature Bank, just so they prevent a spread and run on the bank in other banks. The big winners.
Everybody's talking about what went wrong. Let's now look forward to
Yeah.
We got Deutsche. What do we got? We got UBS. UBS is bailing out Credit Suisse. Just pull up a UBS chart.
Yeah, they just bought them for $1 billion on a big discount. We don't really know what Credit Suisse has on their books. And if they're really getting a deal, but that should help market sentiment.
It's not about a deal. That's a bailout.
Okay.
The Swiss banking system trumps everything, and so that's like who knows? That's just magic. Banking is ahead of citizenry in that country. So that's gonna dominate the news headlines this week. We're regional banks, but the rumor is they were all in seeing Warren Buffett grooming him and cutting his hair and giving him a nail polish and
all of them kind of went down 15 to 20%.
You're back at COVID lows.
Almost, yeah. Pretty rough 2 weeks. And as I said, most of those banks are going to survive, but their profits are going to deteriorate significantly, which obviously
and the equity structures could look completely different.
Exactly, but let's talk about the winners. So obviously, when you have a scare like this, money usually hides in treasuries. We saw a big drop in interest rates,
on the short-term rates and 2-year rates. We saw a huge movement.
On all of them, but more so on the short term, like 2-year. Like this is the 1 to 3 year. Pretty significant spike in treasuries.
Dude, that is a massive.
So drop in interest rates.
Dude, that is a massive move.
Gold and when you have such a big drop in interest rates in just a couple of days, that's basically kind of rewind of the inflation trade, which means that anything commodity related was hit pretty hard, like talking crude oil or metals. They were hit pretty hard last week. And in the meantime, on the other side of the inflation equation, you have the Qs, the Nasdaq 100, which they went up, and actually the Nasdaq 100 was up as much as gold last week. Their both of them were up about 5%. The really big winner, obviously Bitcoin, they're up like 40% in the same time. It's like high beta tech stock on steroid.
you mind if I like walk you through how I'm seeing this? Because I think
Yeah, sure, of course, go
there's
ahead.
the swing trading view, which is fun for you, and then there's like, what is this week saying? So yes, depositors got bailed out. So there's going to be people that will now speculate in the regional banks. Like, so there's going to be tons of money moving around and volatility as we're seeing the banks. I think First Republic traded between 20 and 40 like 3 times. So we're talking about 100% moves and 50% pullbacks. You know, if you go the daily, not the
Yeah, this
week.
was daily, yeah.
Sorry. So you can't really see it, but I mean, oh my God. Like forgetting that what's the valuation of the company right now? And I have many friends that work there in
It
my
closed
wealth.
at 4 billion. Yeah,
Okay. So it's only 4 billion?
it closed at 4 billion on Friday. I don't know what
Okay,
will
so
be
at the
tomorrow.
peak, it was a $20 billion market cap bank. So they clear through Pershing. So as I've been telling people for a year on my blog and on this show, it's like we've been pretty conservative. I don't know, 18 months, it seems like now. It seems like forever, right? Like we were repeating the same thing. But now we have an event. And so now it's important to mark our time around this event. So the first thing here is speculation in these fringe ads. I have no people trading this. Got to have their head examined because this paper could be worthless tomorrow because it's, you know, if someone comes in, they're going to wipe it out. You know, I think as much as I know about banking, I think it's important that hopefully they get a bidder so that the talent stays, and you know the minimum effect on talent that deserves to keep a job. And you know they are my First Republic. It handles my personal mortgage. I have nothing but admiration for the people that have helped me set up those things, and then my wealth management is there. Now again, Pershing is their clearing firm, but there's just so much misinformation, and that's been deleted too by people that I thought shouldn't be deleting things. But the fact is that your securities, if you're in the wealth management side, there everything's held off balance sheet at Pershing, right? So again, like there is a lot of learning going on, but you know, First Republic, as we know it, at least as the equity class, could be wiped out. So the KRE, the regional banks, there's just going to be tons of speculation going on. But as you said, the biggest moves were the most interesting. QQQ, Bitcoin, and oil and gold going up,
Yeah.
and then oil plummeting. Okay, those are
Anything
like the
commodity related,
4
yes.
things that we have to now really watch. Is this move in gold, which has now kind of been in sideways basing for what, 10 years? Let's go to the monthly in gold.
Yeah, I mean, it's near all-time highs,
Okay.
yeah.
So you had this incredible gold run. And again, I am long a little gold here. I was on stock tips, I was talking about it, but you had this incredible run in gold from 2000, four, right through the great financial crisis. See that pullback in the great financial crisis? But then the bull run continued. So I think what we have to see here is if this contagion spreads, gold, like everything else, will get pulled back. The key is, the next move is going to be the big one. If this is gold's real next move, and Bitcoin, let's pull up Bitcoin's really next move.
Or let me pull it up, but I need to open a different platform for that. So
I think we have to have some context here because I'm trying to figure this out.
okay.
So obviously you had the COVID move. Can we look? Can you do like a weekly?
Yeah, of course. Just give me 1 second. Weekly.
Yeah, so you obviously had this massive move like during COVID, right? That started, look at March 2020, that when the market crashed in Bitcoin, went down, I don't know, 50% very quickly. And look how quickly, you know, with the QE continuing the COVID money spread. So the initial speculation here is the same thing. If you're going to bail out the banks with some newfangled TARP, forgetting the four, then this move is a baby move off the bottom here in 28,000 is a gift. Meaning, yeah, if we're going to have the same easing happen, right? Well, there's a couple of things I look at Bitcoin chart and I'm like, I'm not recommending it. I'm just saying watch it. And I do own some. Is oh my God, right? Like you thought that last Bitcoin bubble was bad. This time you're going to have two assets breaking out that are in, that people believe are hedges against the government bailing things out: gold and Bitcoin, right? The third one would probably be machines, which goes to AMD and NVIDIA, right? Like the two leading kind of hot stocks around AI. If you truly think, take out the people and just think about what benefits the most from AI is people have to have more machines. And you can see, look at that NVIDIA move, like there's no bear market. Okay, so there feels like there's this massive, what's working, Ivan, is what would probably people were talking about before. There's always been gold bugs. They have a super reason to be bullish right now, and it's showing up in price. There's Bitcoin, which has more noise. It's never, it's in the early potential years of Bitcoin. And for all the bears out there, I mean, if Bitcoin was meant to be zero, it shouldn't have been zero by now. So in fact, the opposite, right? Despite all the scams and hucksters, Bitcoin is doing what it's supposed to do, which is like be an anti-government bet, with more volatility than gold. So those first two moves are up. And the tech stocks that kind of would benefit the most from what the freshest,
Tech stocks were up as
sexy.
much as gold. That's the
What's
interesting
that?
part. Tech stocks were up as much as
I
gold.
know, but tech stocks just means so much. If you really look at what's done the best relative to tech stocks, it's semiconductors. And then if you dig deep within semiconductors, you'll probably find, and I'm not good enough, I haven't gone through it enough, but if you look at the semis, they've bounced the most off the bottoms relative to the QQQ. And if you dig deep within, there's another one. If you dig deep within semiconductors, you're going to find a lot of relative strength. Global Foundry, there you
Yeah, I mean, they kind of look all the same, Howard, like high correlation for sure.
No, some have done better on all-time high. So again, machines. So if the government's going to intervene here, and if tech is going to lead from what's the hot category, which is AI, then it's Bitcoin, gold, and machines. Right? Banks are going to be a clusterfuck for a long time.
But yeah,
because of earnings. Because of earnings.
Yeah. And
so those are the stories that matter. And I think the other story, Ivan, would be oil. Is this a false breakdown? Like if this, I could pull up OIH, I think would be the most important. They were the strongest going into this. Go pull up a weekly, not a monthly. So the question is this pullback the beginning of the end, which means, we're going back into kind of a Fed easing cycle, and the major trend on oil continues, which is its trend towards, $20, $30 a barrel, some kind of floating rate between 0 and $40 a barrel. So there are a lot of signs pointing to this contagion is kind of held to the banks, and the equity of the banks, who knows? You can argue all day on social media about like, when did it begin? But our job here on Momentum Monday is to see where the money's flowing. And man, the gold Bitcoin semiconductor move, which kind of makes sense if the government's going to have to go back in and start printing. And obviously the tech will, as an overall, the QQQ will benefit too, but I'm not convinced. That still could be a false move because I don't.
Yeah, it all depends on interest rates.
Yeah. And so that's the bogey, Ivan. So then we still are stuck with much higher interest rates, which is much different than when the markets took off the last time. Now, what I think people are rushing to, and why you saw these initial bursts, and we'll find out over time if they were real, is everybody's trying to front run the Fed here because the markets are now connected, right? Everybody's trying to front run the Fed and say, this is the beginning. This is finally, the textbook says you want to get in front of it. I don't need to beat an index or the hedge fund sitting next to me. I'm more in the camp that if this trend is, if there's going to be a lot of money to be made if that was the top of the interest rate cycle. I don't think it's as easy as that. I think a lot of things are broken from both COVID and the fact that the Fed raised rates so fast, and the fact that the government's balance sheets are fucking upside down. But I'm also hopeful that like lollipops and balloons return for every investor and I can make money. So I think we know what we have to watch. What's your gut, Ivan, as a swing trader, not as like a market predictor? What's your gut? Are these moves in Bitcoin and gold and tech real this time?
It seems like they'll be more sustainable this time. Obviously, 30,000 is a big technical resistance for Bitcoin, and if it passes through
it's never been a technical. It's been at extremes technical. There's just not enough
usually
history.
means short term, Howard. So maybe it tags it, pulls back, builds a small base, and then continues higher. Just depending on. There's definitely a lot. The sentiment is so bullish, and it's improving towards Bitcoin right now.
Yeah.
As we saw that the banks are not really the safest place for companies or citizens to keep all of their money. So
you couldn't write a better story for Bitcoin. Here's the story
exactly,
you write for Bitcoin. You could not write a better story because the true bulls have their money off the grid, right? They're doing Bitcoin the same way a gold person would buy bullion. They don't just buy an ETF. The true Bitcoin people already have their Bitcoin off in a hard wallet somewhere, right? Ready to move to New Zealand. The rest is just social media. And the other thing bullish on Bitcoin is there's no laser eyes left. There's nobody on Twitter that kept a laser eye, right? No one. And if you hear someone that was bullish on Bitcoin, from MicroStrategy to Balaji to my friend Pomp, oh my God, like people just want to make fun of them, even though, in a big macro, sense, they've been right for a long time. So the sentiment is staged. And the fact is the government could not be tougher right now against crypto than it's ever been is right now,
there's almost no one left. Basically, Coinbase is one of the main players.
And Fidelity, no, there were huge win with Fidelity. Well, so somehow Fidelity, but
Interactive also offers it, like through Paxos. So you can.
So this is what I'm watching. If I was to buy a bank right here into this pullback, this would be it. Interactive Brokers. Why? Because it was the strongest going into the mess. Okay. But you have a failed breakout. But if I were to speculate, it would be here. And the other speculative financial I would do is Schwab, because I don't understand the move. Like I guess there can be a run on the bank, but I mean, historically buying Schwab down 30% has not been a horrible idea. But again, I'm just not smart enough to go through their financials and see where the true, the question is, was Schwab a complete, panic, or is there something else there that I don't have the time to go through the financials. So I would just avoid financials because I just want to talk about them, but I would avoid them. I think the true spec plays that are going to work are Bitcoin. If the government's going to turn, it's going to be rates, it's going to be Bitcoin, it's going to be gold, it's going to be Bitcoin derivatives like Coinbase, which I'm long. And it's not going to be so much venture capital as people think, because machines are going to replace so many jobs. So, tech won't just come back in every format. But it would be great for the semiconductor industry, obviously, and great for, hardware machine builders, and obviously for certain forms of real estate that are in the business of storage and compute. So again, the bull market will look different. What doesn't look different on first move are the moves in gold and the moves in Bitcoin, right? And that gold breakout, man, that it's on the verge, that is a serious base, of what, how many years? 2011, 12-year base?
Yeah, 12 years base. Yeah, 12 years.
Yeah. And so, I don't care about gold, but it's a proxy for something. And then Bitcoin is the proxy. Interest rates are something to watch. Yeah, there's some tech stocks breaking out, like ANET which is a network stock.
Which one? What is the symbol?
ANET, Ivan.
Oh, yeah, okay, definitely, yeah, they broke up.
So I'm saying they're again, I haven't dove into, I'm not chasing this thing at a 50 billion valuation, but there are companies that are no one's talking about that are hitting all-time highs. Again, I don't spend enough time in the market anymore to like that, but there are winners out there. And what does it say? It provides cloud networking software. So however, for next gen data centers. So if you really, the people that did the work, data centers are what's important, because that's going to drive AI, and the machines have to be stored somewhere, and if everybody's relying on AI features, ANET is obviously the leader. While everybody was talking about a Datadog and Snowflake, it looks like ANET is the huge winner. So that's the markets doing their beautiful dance. What worked last time won't necessarily work again. But it is good also. I'm going to go around the fangs and see that like Google's getting a bid. Like Google ain't going away.
Yeah, all the mega caps, yeah.
Yeah. So the mega caps are actually getting a bid too, as they should.
Apple is looking incredible, setting up for a breakout here.
Incredible setup. Guess what? Who wins if banks fail in the end? Like if Tim Cook said we were going to just FDIC, who has the least amount of money to blow up their accounts? Is Tim Cook. Because you'd cancel your iPhone. So should Tim Cook be a bank? Yeah, if Tim Cook wants to be a bank, I trust him with my 250K more. And then I'll end with my degenerative idea, Ivan. Let's pull up DraftKings, because and I have a thesis around DraftKings, and I think MGM Bets. I don't own DraftKings, and I'm not recommending it, and I definitely wouldn't recommend it. But like MGM Bets, which is probably I don't know if it's connected to MGM Resorts, Ivan. So, but I think it is. Yeah, I don't know if it's a completely wholly owned separate company, but DraftKings, what we're going to see is what we've seen it with GameStop, and now we've seen it with Silicon Valley short sellers, and we're seeing it with like Bill Ackman and all these, people on Twitter truly taking to the Twitter sphere to like share my sources. You know what I mean? There's going to be the degenerative form of financial is just taking off. And the fact that DraftKings, much like Bitcoin, the fact that DraftKings isn't dead, despite incredibly bad margins, unbelievable regulatory headwinds, the fact that they can get millions of kids to leave their cash there, like there was a run on the banks, but like DraftKings, no one worried about their money at DraftKings. Now, of course, they don't have all their money at DraftKings, but a lot of these kids, that is their only cash. They didn't even equate a run on the bank to DraftKings. And I think these degenerate forms of like lifestyle and media are going to become, I can't believe DraftKings is still alive. Like it's the hardest in a 15 billion valuation.
15 billion, yeah.
In a world where they haven't earned, look at the numbers here. It's like a biotech. Like,
yeah.
There's not even a chance of profitability here. So how is that still alive in a 5% interest rate environment? I'll tell you what it's alive. It's the world saying something. And so there's the true leverage play to this, which could have more upside, but like could go to zero, which is DraftKings. And then there's the MGM side, which ties the whole degenerative theme together with hotels and offers, which also owns MGM Bets, which is like these companies they're not the form of new banks, but this is how kids want to express themselves. Like 14 parlays, 4-player parlays for $30. This is their new, derivatives. So, I mean, there's this whole side of the world that's kind of like going through its crisis, and it's super important that gets resolved. But it looks like, I believe, again, I believe they had to bail out depositors because there'd be chaos if not. But the fact is, they don't have to bail out DraftKings. And I can't believe that DraftKings, with all their losses, still trades at a 15 billion valuation.
Yeah, They
And
expected to
that to me
lose
says
600.
so much, you know,
Yeah.
like they're spending so much money between them and FanDuel to get the same customer that does the exact same thing around a commodity thing. So that's as shocking to me as Bitcoin, is that DraftKings with these kind of losses can remain a $15 billion company and keep consumers' trust. They're never in the headlines. No one's ever complaining about the DraftKings, other than maybe on a customer support issue about a $40 bet. So the degenerative era of this country is just beginning. That is the biggest trend that I want to start watching, because I look to these companies like DraftKings and MGM Bets and FanDuel, which was trying to get public, to do a ton of acquisitions, right? So I think if I were to bet on some trends, it definitely still remains Bitcoin. Is gold looks interesting, and those are more of a comment on money supply. You know, and then in tech, it's really around machines and data centers, and then degenerative, investing in finance, and that includes crypto, that includes fantasy, that includes all kinds of gambling bets. I don't know how else to express this in a casino. I don't know how else to express it. But anyways, it's run an interesting moment in time from a very quiet bear market to a very loud, panic. And it's amazing that they're bailing out the banks, Ivan, and the PE ratio and like the Schiller has never been at a higher. So it's like, it's a really bananas that we're in
They're
a
not
panic.
bailing out the shareholders, though. Shareholders are losing.
Well, they're not
everything.
bailing out the shareholders this time, which is important.
Yeah.
Yeah, I think that's at least important. That's different than 08, is there's no one to bail out. I'll tell you who's evil in this place and not getting a lot of bad press yet is Goldman Sachs, who did the financing for how is it possible they didn't leak that Silicon, like everybody wants to blame Peter Thiel, but that initial telegram that Silicon Valley Bank's in trouble had to come from their bankers. If I were a betting man, Goldman leaked this. It's impossible that they didn't, because there's so many ways for them to leak because of Telegram and Signal. But Silicon Valley Bank did the absolute worst job that you could do in a crisis, because look at the bank. The stock was at $280. I mean, this was in a bounce mode for 3 months, 4 months. And then that's a bigger move than Enron.
Yeah, much faster than Enron, yeah.
Exactly. Like it's a bank, dude. It's a regulated product. It's not like Enron or WorldCom. This is like Moody's had it at an A rating. I don't know. Pretty much a bank had a buy on this thing, and it dissipated. The black swan potential in this market, which goes to why I'm kind of happy I don't have to worry about the stock market. It's hard to trust this thing. But anyway, sort of to railroad that. Is there anything else that you're swinging, or are you just?
Yeah, I mean, definitely swinging some gold stocks, some Coinbase. That's about it right now.
Yeah, another one is Coinbase, by the way. So if we pull it up on a daily, like, because I own it, is like forgetting the volatility. I'm not good enough to trade it. That should be dead. Wasn't it supposed to be a zero? I mean, shouldn't it be? Like, much like DraftKings, how is it different than DraftKings? Other than it has the potential to print money. That's the difference between it and DraftKings. Is if they're a survivor, you don't care what they're charging for you to buy their shitcoin or your Bitcoin, right? And there's just something interesting, how similar they are at this point. The difference being that I think it's much easier for Coinbase to go back to printing money than it is DraftKings. And so, yeah, much like you, Coinbase is super interesting.
17 billion. They're basically the same market cap. Coinbase is 17 billion market cap, DraftKings 15. So they're about the same market cap.
Correct. So, I mean, I think that is a again, this is an equity and could be zero tomorrow by the grace of the SEC and God, I don't know. But I'm saying, like, if I'm going to buy a stub on a derivative that I think is a long-term trend, Coinbase interests me more than than DraftKings. But the fact that DraftKings isn't dead with those numbers is a really interesting sign. So I think the market's shaping up to just be different. I think there is a chance that we head into some kind of weird new bull market.
Yeah, in some
You
areas,
know?
definitely. Yeah.
Yeah, but at the same time, these signals, if they're false, could be the trap of all time, right? If gold reverses and oil reverses, you know what I mean? And interest rates stay high, this could be one mother of a trap right here. And so I'd like to see some more proof of this. So that's kind of how I'm playing it.
Okay, good point. Let's wrap it up, Howard.
All right, buddy. Thanks.
All right, see you next week.
See you, everybody.
Bye.